Dollar stays under pressure as risk sentiment improves. Wall Street stocks were mostly higher on Tuesday, with most indexes coming off session lows following Powell's comments. The Fed chair helped ease worries about a policy change by the central bank by saying that inflation is still soft while the economic outlook remains highly uncertain. As a reminder, inflation fears have risen in recent days and weeks against the backdrop of a sharp rise in bond yields. As such, the S&P 500 and Dow Jones gained 0.13% and 0.05% respectively, while the tech-heavy Nasdaq Composite shed 0.5% amid the ongoing sell-off in technology stocks. Asian stocks came under severe selling pressure on Wednesday amid the lingering concerns about rising inflation that could prompt central banks to proceed to raising interest rates earlier than expected. As a result, Hong Kong's Hang Seng lost nearly 3% and posted its biggest daily drop since May 2020 after the government announced an increase in the stamp duty on stock trades for the first time since 1993. Tokyo's Nikkei 225 shed 1.61%, and in Seoul the Kospi edged 2.45% lower. In Australia, the S&P ASX 200 lost 0.90%, while the Shanghai Composite Index gave up 1.99%. In Europe, equities closed mostly higher on Wednesday as investors digested comments from U.S. Federal Reserve Chair Jerome Powell and upbeat German data. The Pan-European Stock 600 closed up by about 0.5%. Germany released its fourth quarter GDP report. The economy grew by a stronger than expected 0.3% in the final quarter of last year. The Federal Statistics Office also revised upward its 2020 full-year GDP figure for the German economy to negative 4.9% from negative 5%. Later today, the EU government leaders will agree to maintain curbs on non-essential travel within the bloc. Wall Street stocks hit new all-time highs after Powell said that the Fed sees no sign inflation might rise out of control. The comment helped ease fears sparked by a rise in U.S. Treasury bond yields in recent weeks that rising price pressure might lead the central bank to raise interest rates sooner rather than later. After Powell affirmed the Fed's policy commitment in a second day of testimony to legislators in Washington, the S&P 500 index added 1.14%, the Dow climbed 1.35%, and the Nasdaq Composite picked up 1% overnight. In currencies, the dollar was lower versus high-yielding counterparts despite mixed risk sentiment in the global financial markets. Against this backdrop, the euro-US dollar bounced from the 20 DMA but still struggles to overcome the 1.2180 local resistance earlier on Thursday. Later today, sentiment and confidence data out of the Eurozone could lift the common currency if the figures surprise to the upside. Once the 1.2200 handle is cleared, more sustainable gains could be seen. Elsewhere, oil prices resumed the ascent after a short-lived and modest pullback. Brent crude surged to fresh early 2020 highs around $66.60 early on Thursday, as traders are cheering the improvement risk sentiment and a weaker dollar. Of note, the futures rose despite a bearish industry report from the EIA. The Energy Information Administration reported that U.S. crude inventories climbed by 1.3 million barrels for the week ending February 19th, while gasoline supplies were virtually unchanged, and distillate stockpiles were down 5 million barrels for the week. In other commodities, gold prices continue to lose ground, extending the retreat to the 20 DMA that has been acting as the key barrier for bulls since the plunge witnessed during the first week of 2021. During the Asian hours on Thursday, the precious metal dipped below the $1,800 figure, a daily close below which would mark further deterioration in the short-term technical picture. Meanwhile, Asian stocks followed Wall Street higher on Thursday after the Federal Reserve Chairman said that the central bank is in no hurry to withdraw support for the economy. The Shanghai Composite Index rose 0.5%, and the Nikkei 225 in Tokyo gained 1.67%. The Hang Seng in Hong Kong advanced 1.75%, and the Kospi in Seoul added 3.14%, and Sydney's S&P ASX 200 was 0.83% higher. Now investors are also looking for Congress to approve President Joe Biden's proposed economic aid plan. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.